Hi everyone, it's Evan from the Trade Risk on Saturday, September 5th here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, and then finally some individual names and trade ideas heading into the week. Holiday shortened week, Labor Day on Monday, U.S. markets are closed, so I hope everyone's enjoying the weekend right now. It's beautiful weather up here in Massachusetts. Before we get started today, I want to just leave a quick announcement that I am holding a trading webinar coming up in a few weeks, September 23rd. It's going to be about an hour long. I'm going to go over just a few topics: how I analyze price action, how I navigate these volatile markets, how I adjust my trading style, being a swing trader given the elevated volatility, how I position size, manage risk. Come check it out, thetraderist.com/webinar, or just click this top right image right up here on my website. You'll get to this page, drop your email. Even if you can't make it, I'll send you a recording after the webinar has taken place. So I hope to see a lot of people there. We had a good turnout last time, got some positive feedback, so I'm going to host another one and continue as long as people are interested. So if we look at the markets this week, let's take a look at a weekly chart first. S&P 500 SPY ETF. Not a very good week for the bulls here. We didn't get that immediate follow through to the upside. We didn't get that V-shaped rally that we hoped, or the bulls certainly hoped that they would have. We did, on the other side, see about a 50% retracement from the reversal of last week. So if you look at where we are now, we have a really wide risk range, all the way down from 182 here to the highs of last week, right around 198, 199. That's essentially, excuse me, the wide range that we are in right now. And I know the lows down here are some of questioning whether or not we should count these lows, just given how fast and how potentially little volume traded at those lows. I'm going to count them, just, I mean, because it is on the chart. There did seem to be some activity there for at least a few minutes, so I am going to count these lows here as a level, and in the S&P 500 these coincide with the October lows from 2014. So that's the risk range that we're in right now. If we go to a daily chart and we look here, you can still see that we do have risk of falling lower. I think for the bulls, what they want to see, or what they should hope for, is that we could put in a higher low here, not to fall all the way back down, but try and stabilize around this 190, 191 level, basically the lows from this week. If we can put in a higher low, then start to work ourselves higher, that could be first steps is to getting constructive here and potentially putting in at least a short-term bottom or some type of base down here that we can work ourselves sideways. The other alternative is that we are going to come slamming down and retesting these lows, potentially break through them, retest them, undercut them, whatever the case is. So that's where it is. I still think the bears, this favors the bears right now. There's still been a lot of technical damage. Fast moving averages are still racing lower. So I don't think for swing trading it's a very easy environment right now. I think you need to pick your spots, either expand your time frames to go to those weekly charts, things that potentially have that can shape up more, or you're giving it some more room, but for now there's still a lot of volatility. We're getting gaps of plus and minus 2% in both directions. It's a very difficult environment, especially if you're trying to go in there and trade with tight stops or using previous day's lows. It's just not a good market for that. So we're staying very light. We put on a position at the end of the day on Friday. We have just a couple of names on long. I'll go over a couple of them later in this video, and that's pretty much how we are navigating this right now. If you look at some other markets, the IWM, very similar situation here. Risk range a little more contained, but again, it's been basically making lower highs and lower lows now for a few months. Fast moving averages still racing lower, needs to get back above last week's highs, has risk all the way down here, down to 108 would be the lows from last Monday, and the Qs continue to outperform relative to the S&P 500 and the small caps. We are above the lows here that held as support for earlier in 2015, but the fast moving averages are still racing lower. Got to see if it can hold $100, or it's got risk of kind of cascading lower here. I think there is a good amount of sort of a volume null down here that we could start to see the price really start to fall if it does break below this $9,900 level. So keep that on watch for now. We're just hanging out sideways, and we just need to see more time, see what this market wants to do going forward before we can really pick a direction here. And it could take Could take a few weeks. It could take, until the end of 2015. I mean, we could just move sideways here for 3 months, and then maybe in December we see some holiday rally to try and get close to the highs again. I mean, again, I'm not trying to predict anything, but we could just be in this new developed range now for an extended period of time, and not continue lower 10%, or not just V-shape up to new highs. So it could be boring. We'll have to just see what happens. Now, if we look at some other markets, TLT held in there this week, made just marginal gains on the week. Basically, very pessimistic look on this last week with this bearish engulfing bar. Really engulfed basically the past 2 weeks of trading here in TLT. But this week, we didn't see continuation to the downside. We tried to see some stabilization. I think this 121 is going to be very important for the bulls to hold on to. I think, especially if we zoom out here, another bullish scenario is we are going to attempt to put in a higher low here. So if we can, we did break out of this base here down at 115. We held that as support, rather. Broke out from about 120, 119, ran to 128. Now if we pull back here to 121, make a higher low, continue higher, that's sort of the big bull scenario that they would like to see in TLT. Otherwise, if we break this and start heading back down here, it's much more pessimistic in my view. We'll have to see what we get. No position, just watching that one for now. Now, if we look at USO, I am still long this one. If we look at a weekly chart, we got long it last week. Like the bullish engulfing bar, heavy volume, protracted downtrend. Like the scenario here, we got long it. Now, I don't love the close on the week because we didn't, there is a good tail here on the top end that we couldn't hold on to those gains. But we did still manage to make progress up over 1% on the week. I'll take it. I know it's going to be a bumpy ride. There's a lot of damage here technically. So it's not going to be an easy road higher, but I'm going to stick with it for now. If we see continuation lower this heading into next week, I'll probably throw this away, but for now we're still hanging in there. Really want to see this $14 level hold, basically the lows from this past week. If they can hold on to those and start to work themselves higher, I like the potential there. Now in UNG, I did try and get short this market on Wednesday, this candle right here, and I quickly was stopped out the next day at a really tight stop. It was basically, I knew I was going to be basically proved right or wrong the next day, just given how tight my stop was and just given the close here at at a high stakes inflection area. So Thursday it did stop us out. Friday ended up giving back most of those gains. Closed pretty weak on the day. I would reshort UNG. I think if it does start to break below this $12.40 level, I think it's an actionable short. It's been beaten up. It's been in a downtrend for some time. It's been moving sideways for many months now, all of this year, all of 2015. So if it starts to break down, I still would take another shot at UNG on the short side. Gold, not doing too much, just kind of hanging out here. It's holding the lows from earlier in August. Still can't get back above 110, which was the lows for multiple months back at the end of 14, the beginning of 15. Really needs to get back above 110 or retest the lows down here. Otherwise, it's just kind of floating around in no man's land. Silver, similar thing. It's trying to hang on here right around 1380 or so. Still a very damaged chart. Needs to break back above this area here right around 1480 to $15 in silver. Next, let's look at some leading sectors. The technology sector is hanging in there. It's trying to staying really tight up here. It's basically the fast moving averages. The AEMA is catching up here. It is right above price. So XLK is trying to hang in there. Still damaged though. Still a tough chart. But if you want to look at some leadership, this is leadership. Even though it's still damaged leadership, this is where you need to look. And the semis are still hanging up there relative to the other markets. Look, it's in between these fast moving averages. It's starting to squeeze in. So I think the semiconductors is where there could potentially be a rotation to. That's what we are sort of gleaning from this information right now. So we'll have to see what happens. XLU and the IYR still the very weak sectors. They are below last week's lows. So these rate sensitive sectors are still feeling some of that pressure. Now if we look at some individual names, we're going to go through a lot of these fast because Most of these are in similar wide ranges, and there's not too much to do, especially from a swing trading standpoint. When you have wide ranges, you got to either play the extremes and do some mean reversion trading. Breakouts are usually tough, and especially with a lot of these names, they're just in the middle of some wide ranges, so it's tough to do too much with. So Apple, first thing here, we are in a downtrend. We are in a wide range here, all the way down to basically 105. These were the lows from earlier in this year. That's sort of the next stop on the downside, and on the upside, 115 is sort of the target that the bulls need to take out. Otherwise, I don't see too much there. Google, this one's, I mean, even messier. This is such a messy chart now, and we did fill this gap. If you look on a weekly chart, not as messy. I mean, you can see that we did have this monster breakout, and now we're just seeing a lot of volatility up here in the weekly chart. We're still in an uptrend, so I mean, if you go to the higher time frame, you'll start to smooth things out. But this daily chart is just an absolute mess. It's trying to hang on here right around 625. Got to give it some room. Got to see these ranges tighten up a little bit. Not too much else to say about it. Netflix is, I mean, this chart is an absolute mess too. If you look at a weekly chart, I mean, still in an uptrend, down 16% this week, and still in an uptrend is pretty impressive. But look at the ranges here. Look how wide this all is. There's just a ton of volatility here, and this is really messy to, you know, to really try and play. It would, and the risk range really falls all the way down to last week's lows down at $88. So that's potentially an action area. As long as it hangs out here, just seems like it can just bounce around really violently. That's just a tough one to trade. Facebook is a little bit tighter here. I think it's got to get back above this $91, get above these fast moving averages. That could start to look more constructive. Otherwise, it's still just sort of messy there as well. Twitter, this one has been outperforming recently. This one got beaten up quite a bit, especially on this big drop here, and needs to get back above this 2950 level. You can see the fast moving averages curling up, so trying to support price now. This is constructive, but the risk still is to the downside here. You got to be careful that this doesn't just wash out and come back and retest these lows. But for now, it's trying to hang in there. Back above 2950, which would be these August highs, or not the highs. Yeah, it's pretty much the August highs, right in this range here, would start to make this chart slightly more constructive in Twitter. Now, if we look at some other names, Amazon, incredibly wide risk range here as well. If you look at a weekly chart, you can see we're very clearly in an uptrend, but the daily chart, very messy. It's got a couple of layers of resistance. Got to get back above 525. Then 535 or 540 now. Get back above those levels. That's when it gets a more calm and interesting long. For now, there's risk all the way down to 450, which were the lows from last week. So very difficult to try and jump in there. On Amazon, Tesla, this is another one that's tightened up. You know, it's not as crazy as the other names here. It's as long as it holds above this 230, 235 area, I think it remains more constructive than a lot of these other names. Still got a bunch of overhead supply around here, so it's not going to be an easy trade to the long side, but at least you're playing with some tighter ranges here in Tesla. So get a little more strength out of that one, and that one looked decent. GoPro has completely fallen apart. We talked about this the other day. I mean, it took what, 5 or 6 months to grind out gains from $36 all the way up to $65, and then it gave it all back in 1 month. Very poor action here, but we are at a pretty interesting inflection area. We're overextended to the downside, so it looks like there's a lot of money just trying to jump out of this thing really quickly. So we'll have to see if this is just an overshoot here. It is at a very interesting area. These are the lows from July and August. Not quite the all-time lows, but very close to it, and basically below $36 it might as well be, because it's going to be a very quick fall because there isn't too much previous price action below this area. So very concerning here for GoPro. Let's see if it can reverse it next week. Otherwise, it's sort of it's at an interesting area if that's your trading style. And Alibaba, this one is just continuing to sort of trend lower, pretty orderly, which is usually the scariest type of trend, because it's not, you know, it's just kind of falling lower continuously. Fast moving averages aren't that extended lower. So really, this one is still concerning. Needs to get back above $70, $71 or so. That would be a start to get some constructive action out of this. But for now, the bears are just completely in control here. Now, let's look at a few trade ideas heading into the week. JCP, this is one that we got into at the close on Friday. Basically, looking at a weekly chart, this is the range that I've been looking at for the past 2 years or so. It's been spent most of its time below this $9.25 level. We had a brief breakout here in late 14, but we quickly gave it back. So we're back above it now. We've followed up with nice continuation to last week's bar. Closed on the highs, outperformed very nicely this week given the market action. So we did get long this. I like this for continued gains. Let's see what JCPenney does moving forward. Next one is COMM. COMM here. This one is breaking out to new all-time highs despite the weakness here. This one has also been in a range for basically all of this year. We did see continuation higher this week, outperforming nicely. It didn't close on the highs. Still looks really good, mostly on a weekly time frame. I mean, on a daily here, you can see what's going on, and this one looks good for further gains, outperforming very nicely. And then finally, LULU isn't ready just yet, but if you look at a weekly chart, you can see we had this nice impulse leg higher to basically end of 2014 into the beginning of 2015, all the way from $38 up to almost a double, up to $68. And then we went sideways for 6 months or so, and now we're trying to get back to the top end of this range. Look for a potential breakout. I mean, it's very clear. Nice consolidation, nice uptrend, breakout, consolidation sideways. Let's see if LULU can get back above $68, and that one could set in motion. You get a lot of messy supply over here, which I don't like. The highs all from 2012-13 beginning, 2012 and 13 really are all right above here, right around $77. So definitely going to be tough to trade into that, but otherwise LULU looks pretty good here. So that's what I have for today. Hope you are enjoying this long weekend. Again, if you're interested, traderisk.com/webinar. Sign up for that September 23rd, and I hope you have a great weekend. I'll catch you next time.